BNB Chain burns over 500 million in BNB tokens. This is always exciting when it happens. I feel like I want to say this is a quarterly thing that Binance does. I think that they've always been honest and transparent about it. I think it's super cool. But let's read a little bit about it. So BNB Chain burned over 575 million worth of BNB as part of a broader program. It includes the auto burn as well as Pioneer burn program. But let's talk about why Binance burns BNB. The commitment was made back in 2017 to delete, I don't like that term, but okay, 100 million BNB from circulation to keep only 100 million BNB in circulation. The commitment is automatically honored each quarter and calculated according to auto burn formula, and the mechanism is independent of the Binance exchange. Yay, I learned something, and I also fact-checked myself. And as you guys can see, Binance is currently trading at, or BNB is currently trading at $302.84, and it's held pretty well considering the crypto contagion. Will, I would like to hear your take on this fun story.
Yeah, this is an interesting story because it is like a different mechanism than a lot of chains use. BNB Smart Chain is the actual like blockchain of sorts for the Binance ecosystem. I say of sorts because there's a few things about it that are a little bit different than Bitcoin or Ethereum. Binance has a lot of ownership of this chain. In the past, when it's had problems, they've restarted it, they've halted it. When there's been hacks and things, they've messed around with it as well. And this whole story sort of revolves around a central figure or a central point of the Binance Smart Chain, which is the ability to burn tokens quarterly. They basically burn those tokens based on how much revenue Binance gets. So this is actually a helpful metric for understanding how healthy Binance is. If they burn a lot of tokens over a quarter, that probably means they had really good revenue. If they did not burn that many tokens over a quarter, that means their revenue was not that good. So that's sort of like the basic metric to take away from this and walk away from it. That being said, Binance has changed this chain and has changed the burn rate quite a bit in the past. They've changed the white paper. They've made changes when hacks have happened. So it's not all cheery and roses here. There is some considerations to be made when you look into this. There are things that they change. And, you know, it is their project. But at the same time, it's good to see a little bit more transparency on subjects like this because it's not always like they burned this amount of tokens and everyone can trust that. They change it because it sort of is their property. It exists in this quasi world where, yes, there's a bunch of different validators and you can become your own Binance validator if you have enough BNB token. But Binance also doesn't reveal the validators and has in the past changed the specs for the chain. So it's a little bit in between. Zach, I'm going to throw the story over to you, get your take on it.
Yeah. Exchange tokens, I feel like if there's anything that is just waiting for like a securities violation crackdown, it's exchange tokens, and BNB is chief among them, right? And I think like if this is a mechanism to like make it seem less like a bootleg security, then by all means, go for it. A lot of people have BNB across the ecosystem. They use it to reap benefits for trading on the Binance platform, but it sure seems sort of like a bootleg stock that people are trading in relation to their perception of the health of these companies, right? We saw this with Celsius, they have the Cell token. BNB is obviously the most famous example, but there are others in this space that have exchange tokens that provide some functionality, but more than anything kind of operate like a fake stock, right? And so I think whether this mechanism is meant to sort of assuage some of those concerns on the regulatory side, you know, that may be a good thing. But honestly, I think that's sort of the sub-narrative that is interesting to me is how these things continue to evade crackdown from securities regulators in different jurisdictions around the world. That's my initial thought relative to this story. But anyway, Wendy, what do you think?
I mean, part of the problem is, again, we don't have clear laws and regulations, and I feel like some of the Southeast Asian areas, they're a little bit more progressive than we are, especially in the United States. But at the same time, like, again, this is why we can't have nice things in America, is our public servants can't get it together. They can't come up with clear guidelines and regulations. And I really like the point that Will brought out is that, and this kind of relates back to Bitcoin, is we do have projects like BNB and we do have like projects like Ethereum, and everybody claims that they're super decentralized, but realistically they're not, because there's people behind it that are actively doing things to kind of modify different aspects of the project. And I like BNB. I hold quite a bit of it. I think it's great. I like, Binance Smart Chain, super cheap to send transactions back and forth. But at the same time, it's still a very centralized project, especially when you have somebody, making choices and modifications on how much you're going to burn and when you're going to burn. So is what it is. And that's, I guess, why we kind of go back to Bitcoin as the, I don't want to say the end all be all, but as the one that's kind of tried and true for true decentralization to an extent.